If you watch the news or scroll through social media, it feels like the world of investing is a total minefield. You're bombarded with secret formulas, get-rich-quick shortcuts, and enough noise to make anyone want to just walk away. But the truth is, successful investing isn't actually that complicated. It isn't about being a math genius. It's about being an expert on your own behaviour. Today, I want to strip away all that chaos. I'm going to use some simple pictures to show you the real path to financial independence. We're going to meet your two biggest enemies, one that's invisible and one that's inside your own head. And I'm going to show you the superpower that almost everyone overlooks. Let's head to the video and map out the simple path to success.
All right, let's talk about successful investing. We're going to do it with pictures, a visual guide to what really matters. Look, this isn't about some complicated chart or the latest get-rich-quick fad. Nope, this is about a few simple, powerful ideas that can put you on the path to genuine financial independence. So let's jump right in. You know, this quote just hits the nail on the head, doesn't it? The investing world today, wow, it feels like a total minefield. Everywhere you look, someone's pushing a shortcut or some secret formula, promising you the moon. It's just so much noise, so much confusion, and honestly, almost all of it is designed to distract you. So let's just be crystal clear. What we're doing here, it's the exact opposite of all that chaos. We are not talking about shortcuts. What we are doing is mapping out a real, reliable path. Think of it as your own personal journey, one that's built on principles that have actually worked, time and time again. Okay, so on any great journey, you're going to face some obstacles. And on your financial journey, there are two big ones, two major enemies standing in your way. So let's meet them. Let's find out what we're up against. First things first, we need a mind shift about what money even is. It's not the number you see in your bank account. Not really. It's all about purchasing power. What can that money actually buy you? I mean, that's the whole point, right? If your savings aren't growing faster than the price of, everything, then you're actually going backwards. You're getting poorer in real terms. And here it is. This is that threat in black and white. Your first enemy is this silent, invisible wealth killer. Inflation. Just look at this number. A single pound from back in 1960 has lost 96% of its buying power. It's basically worth pennies today. That is the incredible, destructive force of inflation working against you every single day. Okay, enemy number two. This one's a little different. It's internal. It's worry. And oh boy, does it have a best friend, the 24/7 news cycle. The news just loves to feed that feeling of pessimism, right? And trust me, this emotional enemy can be every bit as dangerous as inflation because it tricks you into making terrible decisions, usually at the absolute worst moments. But check this out. This really puts that worry into perspective. Just look at this timeline of crises. The dot-com bust, the global financial crisis, Brexit, a global pandemic. I mean, it's just a constant stream of reasons to absolutely panic. And yet, through all of that, what has the market actually done? It's climbed. It has climbed that wall of worry. It just goes to show you that when you're investing for the long term, being an optimist is the only realistic stance to take. So we've met our two enemies, inflation and worry. The big question is, how do we beat them? Well, it starts with having a solid strategy. And the very first step is figuring out what game you're actually playing. Think about it. The market is filled with people playing totally different games. You've got the short-term trader who's just trying to make a quick buck before the end of the year. And then there's you, the long-term investor. You're not playing for a bonus, you're playing for your future, for financial independence. Your goals couldn't be more different. The absolute key is to know which game is your game, and then just be ruthless about tuning out all the noise that has nothing to do with you. And this simple chart shows you exactly why your game is the winning one. I mean, look, if you try to guess what the market will do in any given month, it's pretty much a 50-50 shot, a coin toss. But if you stretch your timeline out to 10 years, whoa, the probability of a positive return jumps to over 90%. Time is your superpower. It's your greatest advantage by far. All right, so another key part of your strategy is choosing your tools, and really it boils down to two main choices. You can either loan your money out by buying bonds. You're basically the bank for a government or a big company, and they pay you a fixed interest. Or you can own. You can buy equities, which means you become a part owner in some of the greatest, most innovative businesses on the planet. You're not a lender anymore. You're a partner in their success. And when you look at the long-term results of that choice, well, it's not even a contest. Seriously. Over the last century, if you were a lender, you made about 1.3% after inflation. Okay. But if you were an owner, you saw returns closer to 6 or 7%. That's a huge difference. And it makes sense, right? Businesses create, they innovate, they grow, and when you own them, you get a piece of all of that incredible growth. If you want to beat that inflation dragon we talked about, you need the firepower that comes from ownership. But, and this is a really important but, getting those incredible returns from owning great companies doesn't come for free. There's a price. There's a cost of admission that everyone has to pay. No, I'm not talking about a financial price, like a fee you pay to a broker. No, this price is an emotional one. The price of admission for those amazing long-term gains is having the stomach to ride out the downturns. The drops in the market, they aren't a sign that something's broken. They're part of the system. It's not a bug, it's a feature. Let's make this feel real for a second. Think back to early 2020. The world is shutting down and the market drops 34%. Just imagine that, watching your hard-earned savings get slashed by a third. That feeling right there, that is the emotional price I'm talking about. But here's the kicker. Here's the reward for paying that price. For those who did nothing, who just held on, gritted their teeth, and stayed invested through that terrifying drop, their return for that same exact year ended up being a positive 16%. You see? You had to endure the pain to capture the gain. So how do you do it? How do you pay that price without freaking out and selling at the bottom? You have to constantly remind yourself of this one thing. You're an investor, not a speculator. The daily market chatter, the scary headlines, that's all for the speculators. It's not for you. Your job is to ignore it and stick to your long-term plan. And that brings us to the final leg of our journey. And honestly, it might be the most important part of all. It's about simply staying on the path. Because this is where all that discipline, all that patience really begins to pay off in a huge way. So, let's recap. You've fought off inflation. You've battled worry. You've paid the emotional price of admission. After all that, what's the actual, tangible reward? What does a lifetime of disciplined investing actually get you? Okay, let's put some real numbers to this. We'll look at the last 60 years or so. First up, our old enemy, inflation. The cost of living, it went up by 10 times. That's the hurdle we have to get over. Now, let's look at our solution, being an owner. During that same 60-year stretch, the income you would have received, the dividends paid out by those companies, grew by 31 times. That didn't just beat inflation, it absolutely crushed it. And here's the final piece of the puzzle. The value of the companies themselves, the capital growth, it grew 61 times. 61. That is the truly mind-blowing, life-changing power of just staying the course, of being an owner and letting that magical force of compounding do its work over decades. Look, this journey isn't always a walk in the park. It takes patience, especially in a world that is completely obsessed with getting everything right now. But by sticking to these simple principles, by choosing to play the long game, you're the one who's going to have the last laugh, for sure. So you see, successful investing, it's not some big secret code you need to crack. It's a path, a clear one. It's about understanding your enemies, knowing what game you're playing, being willing to pay the emotional price, and having the discipline to just stay on that path. It's all laid out for you. The only question left is, are you ready to walk it?
Those numbers, the 61 times growth over 60 years, they aren't just statistics. They represent the freedom to retire on your terms, to help your kids, and to live without that constant knot of financial worry in your stomach. But remember the catch. That reward is only for the people who are willing to pay the emotional price of admission. It's for the people who can look at a 30% drop and see an opportunity instead of a catastrophe. The path is clear, the math is proven. The only variable left in this equation is your own discipline. So I'll ask you the same question we ended with. Are you ready to walk this path? Because you don't have to walk it alone. Subscribe to keep building your roadmap with me. Thanks for watching, and I'll see you in the next video.